farmland tends to adjust gradually over time.
Hello and welcome to this edition of the State of Soy. I'm Aaron Putsey. Thank you for joining us. I'm visiting with Doug Baer. We're in Clive, Iowa, here at People's Company. Doug is a land agent for People's Company. And Doug, the reason we're here is your company, People's Company, has come out with a white paper that I really think is a must-read on farmland as an asset, the issues that are impacting farmland values, and what farmers and landowners should be thinking of right now during a time of great volatility. What's the headline that you want people to know from this white paper that your company has produced?
Yeah, I think, Aaron, the headline is, in a world chasing quick wins, farmland quietly reminds us that patience, not prediction, is the key to real path of prosperity.
And we know that sometimes it's hard to be patient, especially right now with all of the volatility. Let's hit on first and foremost what everybody understands, at least at the macro level, and that is that prices, especially in that soy complex, are pressured. Give me your read on that.
Farmland tends to adjust gradually over time rather than just an immediate change in some of the commodity markets. And I think really as we kind of look down the road over the next not only couple years, but also let's look at the next decade. Farmland assets are valuable for some of these families. The question that's on every farmland investors is like, how will this farmland market itself change for some of the commodities? And it's not only on the short term, because we also have long-term appreciation that land continues to be valuable over time. And it's not just a sole one step of cash rent back as well.
What are other factors out there, Doug, that do affect the value of farmland and in turn, perhaps cash rents?
Some of the broader economic forces and how they interact with key trends are crop prices themselves, rental rates, and ultimately cap rates. Our soybean farmers need to continue to make their informed, strategic farmland investments for their family, and just know that almost 90% of all of our crops have I'm going to call it a safety net for crop insurance, Aaron, that we kind of know where we can break even on some of that long-term appreciation. We definitely see some additional growth factors. Cities continue to grow. There actually is some economic development potential in some of our nearby farmland. But just as a whole, long-term supply to the market is valuable for our farmland.
How is the volume of sales right now? Do you have some sellers out there? Do you have some transactions going? What's the current market dynamic?
We're definitely not to the volume that we were back in 22, early 23, but we still see farmland coming to the market at a steady pace. Now we are running into some people just with all of the economic uncertainty right now, Aaron, of just going, hey, what do they do as a family? And we would definitely tell them there's always farmland buyers out there. We still have a pool of investors, family offices that are continuing to look for farmland assets because we've really seen an influx of investors looking for strong, stable productions. Now it may not be the same cap rates as industrial or commercial real estate, but that steady 2 to 4% on some of our agricultural assets, it's there for the long term.
So if there is a family or a farmer out there who's looking to want to expand their acres, that's a tough combination right now. On the other hand, it's those strong land prices that are keeping ledgers whole during this time where we're having these wide fluctuations in market prices. So it's kind of a catch-22, isn't it?
It is, Aaron, and we definitely want to make sure that our families stay vibrant. If there is an opportunity of investing into farmland to bring that next generation back to the farm, we truly think that there are some opportunities, especially this fall and early 26. There's going to be opportunities. You're going to typically see over half of the farms come to the market after we get that crop off. So there are going to be additional tracts that come to the market that families can expand.
And then lastly, you got interest rates. You're watching the Fed and you're watching what interest rates are doing, and right now they've been pretty stubborn on wanting to move them lower. So
they have definitely been stubborn. So when we start looking at that of going, how does that impact an operating note as well on the farm? It's going to take some strong economic and sitting down with a strong banker and making sure that, not to make the necessarily sacrifices, but making sure that we keep that bottom dollar on the farm operational, and that is definitely a challenge.
I think it's a white paper that is worth taking a look at. It's well worth the read, especially as we look to the future and given how important farmland values are for the agricultural community during this time of great volatility from a market standpoint. Reporting for this edition of the State of Soy, I'm Aaron Putsey.
Farming is a competitive business, and you need equipment you can count on every single day. That's why for nearly 90 years, farmers have entrusted their grain handling to Brandt Agricultural Products. Brandt's full line of hardworking conveyors, augers, grain carts, vacs, grain bagging equipment, and tillage equipment are made to deliver the competitive edge you need to lead the field and are manufactured here in the USA. For more information on our full line of products, visit brandt.ca today.